Good morning. Welcome to the Mortgage Rate Forecast with Scott Criss. It's April 28th. Let's get started with some charts. Here's what we got. Right now, mortgage-backed securities are trading about $102.22 right here on the charts. We had a really nice day yesterday. I mean, look at this. Look at this. We were at right at our mark, 102. In fact, just trading a little bit below it, and popped up. Really, really good day for bonds yesterday. As far as our resistance level, we are pushing right now today on the top end of our downward trading channel. So today's going to be a pretty pivotal day in my opinion. If we can close about 102.40, maybe hopefully 102.50, that would be a really good day for bonds, meaning that we're probably going to start to see some flattening and definitely trade outside of this downward channel. So here's where we're at. Our support's coming in at about $102 still. Our resistance is up here at about $102.50. So let's see what happens with treasuries today. That's going to have a pretty big impact. Jobless claims came out, really not much impact to bonds. The GDP came out, which if you're not familiar, the GDP is the value of goods and services. That came out today, really was not great. Kind of surprised that bonds aren't doing a little bit better than they are. Again, we're going to see that treasury auction. We could see some movement of mortgage-backed securities or bonds here later on today. As far as news for the first quarter, it was the slowest first quarter for our economy in the last 2 years. Spending's down, and not just spending down on the consumer level, but also commercial level. So not so great news for the economy, but mortgage-backed securities, we still saw a little bit of sell-off, but like I said, looks like we're flattening. Here's what we got. As far as Freddie Mac's reports of March, Freddie said that the average 30-year fixed came in at about 3.69%, and consumers were paying on average about a half a point. And that was with average trading about $102. So we're about 22 cents better right now than the average trading in March, which would mean for the same rate at 3.69, one would assume instead of paying half a point, they're going to be paying a little bit closer to a quarter point on average. So that's where we're at on average today. As far as the analyst outlook, some are holding a neutral position on the short term and the long term. Some are calling for a neutral position and a bullish long term. And so some of the analysts are pretty inconsistent, but here's what I'm calling for. I think we're going to break out of this downward trading channel. I honestly do. And I think we're going to see maybe a potential pop in the short term. We have to make up this gap right here. Bonds like to make up gaps. So I think we could see a little pop, and we could try to trade right up here for a while. That's my projection. So anyway, that's the news for today. If you have any more questions, you can contact me. Leave a comment below. Would love to hear from you. Everything likes to be liked. So does this video. So be sure to hit that like button, and would love to hear from you. It's your first time on the channel. Up at the top left, you can hit subscribe, and then you can get updates when they're released. And if none of this made sense to you, hit the link at the top right. This will take you to Mortgage Bonds 101, give you a brief overview as how these charts and how this trading affects you as a consumer. Anyway, that's it for now, guys. Take care. Have a great day.